There are two types of people in the world, those who watch Sharknado, and people like you. Investor Beat starts now. Thanks for watching. I'm Chris Hill. In the wake of Wall Street's record highs on Thursday, there was no champagne being popped on Friday. The Dow index was almost single-handedly dragged down by one stock, Boeing. More on that in a minute, but first, joining me in studio today, Jason Moser and Ron Gross. Guys, our top story, retail sales numbers for June are coming in, and for some companies, the results are looking pretty good. Costco's same-store sales were up 6%, slightly higher than expected, and Gap's same-store sales were up 7%, much higher than analysts were expecting. What do you think, Ron? Should we be optimistic? Is this a trend here?
I think we should be optimistic. I think the numbers look pretty good almost across the board. If there's anything we could point to, maybe on some lower end, there's some discretionary spending that is being held back a bit, which is understandable. But as you said, Gap strong, Costco strong, people are shopping.
The Gap numbers are really pretty surprising, particularly when you look at Old Navy, same-store sales up 13%. And this is a company that was really struggling for a long time.
Yeah, they were up against the ropes. And I tell you, I think a lot of these retail companies, while there is room for optimism, we have to remember that they are going up against some relatively weak comparables, right? So it's not like they really had to clear this big 10-foot hurdle. But you know, like Ron was saying, people are out there spending, and that's great. I think it's also worthwhile to keep an eye out on e-commerce. And when you see something like an Amazon, Channel Advisor was reporting some great sales numbers for them for June, which is encouraging. And when you consider how small e-commerce is today, it's only 5.5% of the total retail picture. That's a big trend that I think investors need to try to play into.
One more trend we're seeing, I think, is some promotional activity, which we're bound to see here and there. Old Navy specifically, I think they'd be the first to admit that they did do some promotional activity. That helped boost those numbers, the 13% you mentioned, but still very strong.
Gap stock for so long was dormant, and now it's at a 13-year high.
Yeah.
Is it starting to get pricey?
It's starting to get pricey, maybe 10 to 15% left to run. It's selling at about 8 times EBITDA right now. 10% more than I'd call it fair value.
Wow, that's a specific call. All right, let's get to some of the day's movers and shakers. Shares of Boeing down after an empty 787 Dreamliner caught fire on the runway at London's Heathrow Airport. This is really starting to be a problem for Boeing.
Certainly continuing to plague the company. The stock price, as you said, is reflecting the concern. It's not something that will ruin this company. It is something that they will fix. It is not something that will even ruin earnings to any significant extent, I believe. The company has been receiving some very strong orders. The company continues to do well. This is something very serious, but they'll take care of it.
WebMD up big after the company said revenue and profit for the year will be higher than originally thought. Stock at a 52-week high. What do you think, Jason?
Yeah, I mean, they brought a profit, it looks like, this quarter, as opposed to a loss or maybe break even like the street was expecting, and raised guidance for the year. So that's good, obviously. But this is a small company, and they make their money, generally speaking, from advertising. Their public ports bring in about 85% of their sales, which those sales dollars are advertising dollars. With big pharma, really any kind of medical advertising you can think of, they're going to WebMD. So, I mean, I think it's great that they're making progress, but it's still just, I'm afraid they're competing in that advertising realm where those dollars are going to go all sorts of different places, and I don't see really any long-term reason to invest in this company, so I'd avoid it and look elsewhere.
UPS reports earnings on July 23rd, but shares down today after the company cut guidance for the quarter. Is this a blip? Are they just trying to get out ahead of this, or is this just an inkling of more damage to come?
It's not really a blip. There's a little paradigm shift going on, and we're seeing it not just with UPS, but FedEx has said it as well. There has been a shift to lower cost options among many. UPS and FedEx are doing something about it by cutting their business lines to Asia. They're cutting costs. Will this eventually reverse and go back to the more expensive options? Perhaps, but not anytime soon. So it does truly have an impact on earnings and cash flow.
RadioShack up on reports the struggling retailer is talking to investment banks about how to improve the business. You love this company, Jason. How would you suggest they improve their business?
Well, Chris, it seems like we're seeing a number of press releases from RadioShack trying to defend their liquidity position, saying it's okay, we have a liquid balance sheet. It's kind of like saying the hole in the boat isn't that big. There's still a problem here we have to resolve. And, if you look at the last 5 years of sales for RadioShack, they're flat. But what's really scary is their gross margin line's down about 10 percentage points over that same period of time. So Ron was talking earlier about promotional offers, and that's where RadioShack is getting killed. They're having to slice prices in order to move inventory out the door. And just the icing on the cake here is that their inventory on the balance sheet is just ballooning out of control. I see no reason whatsoever to invest in this company. I would avoid it.
Okay, that wraps up the first official week of earnings season. Let's look ahead to the rest of the month. Ron, what's the stock you've got on your radar?
Titan International, TWI, a company we own here at the Motley Fool. They make wheels and tires for companies like Deere and Caterpillar. They recently suspended their earnings guidance, which the street does not like. Stock comes down. We were able to get in at a nice price as a result, but I want to hear more in the next earnings call.
All right, Jason, what about you?
Well, you pay for a cheery consensus, and sometimes the market gives you a dreary consensus and maybe a deal. And I think that's what we're seeing with Joy Global today, a big mining equipment operator and producer. They sell a lot of that mining equipment really for coal, and that's where they make most of their money. And so there are global commodities are getting crunched. Coal apparently is evil, according to a lot of people. And there are some questions as to an acquisition they made, if there maybe isn't some fraud in there, a la Caterpillar from a little while back. I think that these are overblown concerns for really what is a solid company. And at about 7.5 times earnings today, I think as the global economy picks back up, this is going to be a stock that really picks up some steam from there. So I think it's worth a look.
All right, for Jason Moser and Ron Gross, I'm Chris Hill. Thanks for watching. We'll see you next week.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal